Hey traders, Parker here with another video. Today I'm just going over the sector rotation, and basically what you can see out there is still a bloodbath. You have a couple of greens out there. The biggest one is energy. You can look at this change over the week. It's 7.27. Its relative strength is 99.97, and its market difference is 90.31. If you don't remember from my last videos how I got this market difference, it's basically its RS number minus the S&P's RS number, and the S&P's RS number is 9.66. So it's still outpacing the S&P 500. If the market difference number is positive, it means it's outpacing the S&P 500. And as you can see with energy, it's bright green. That means it's 5 day, 3 month, and 1 month are all up. Utilities, materials, and gold are dark green because their 5 day, 1 month is down, but their 3 month is up. Staples is green because it's 3 month and 1 month is up, while it's 5 days down. Defensive is orange because it's coming back up. It's making its rounds back up. And let's look at it from a different point of view from our labels. And here are the labels for it. As you can see, XLE is green across the board, and there's his RS number again. Here's his overall change is 11%. I got that by adding these numbers together and then dividing them by 3. So, and here's XLP, that's Staples. As I told you before, it's 1 month is up, and it's 3 months is up, but its overall change is negative 8.5 because it's because of the 5 day change. And then you have XLU also, and then here's your XLB, and here's your gold, and you can see where their RS numbers are as well. If you don't remember how I got my RS numbers, it's basically a ratio between the 52-week high and 52-week low, and that's how, and it's between 0 and 100, just like the relative strength of the RSI. And these are the performance columns, and right now I have on the watch list of the industry watch list. So let's go back to the chart. Right now I have the S&P 500 on a 5-year. These what you're looking at is a volume profile with the version points or controls, and once price crosses below those points or controls, it's no longer valid. It's no longer valid to be a version point of control. And let's go check out the SPY. So SPY tried to recapture this area from last month. This is the value area for last month. SPY temporarily popped into it, couldn't hold it, and popped right back down. And most of this stuff is due to the FOMC meeting, but it's also showing you all the sector rotation or the business cycle, as others like to call it. This right here, this is the current value area. This light green, light red area. I have it projected out away from the current one. Away from the previous one. And you can see most of our volume is right here at 413, and SPY held that for a little while with these 3 candles. It finally got back in that area with this 1 candle, but right now it's struggling. So, and it stopped right back here again, just like I showed you before, my 110 field. And we can raise up and look at our sector rotation model. This green area is showing the difference, and that is the S&P 500. This white and red line is the S&P 500's average, and it's set at 21 days. Right now I have all the other averages cut off. Right now the only thing you're looking at is energy shooting back up, and it has energy in the uptrend because it crossed back above its at 21-day average. You have defense still in the downtrend. You have this orange line is the VIX, and the VIX, it came back up. It was in a downtrend, and you had SPY divergence, but VIX decided it wanted to go back up, or because of what's going on in the market. And the VIX is a measure of volatility. And you have SPY still in downtrend. You have downtrend, offensive, downtrend, defenses as well. Offensive stocks. And if you don't remember from my last video, I took the industries that are considered offensive. I added them together and averaged them out. And the same thing with the defensive sector. Those industries, I added them together, averaged them out. And that's where you're getting this purple line from. And these lines right here are just like the RSI, and this shows you the relative strength of those sectors and those stocks. You actually have all of these in here in this model. If you wanted to put them on, all you have to do is just go over here and select to have them on. You can cut off all those bubbles. You can do everything, everything. This thing is fully customizable. You can even change those numbers that I have in there. Right now I have 90, 70, 50, 30, and 10. But if you wanted to put the Fibonacci numbers in there, you could do that as well by just altering those numbers. And right now I'm going to go ahead and take the sector rotation off of that. And let's go back into volume. And it just takes a second to recalibrate. And now let's look at the volume. Right now I have my volume set at 252 average. And this is what we're looking at. And these white ones and yellow ones are ultra high volume, or considered ultra high volume according to the average. And because we've had so much volatility, that's why you're getting so much white and yellow in here. And when it comes to the bright green and bright red, that's high volume. Then you have the dark green and dark red, which is low volume, below average volume. So we're coming back here, and I have my 0 at this last swing high, and this last swing low is my 100. I have the Fibonacci inverted because I'm predicting a down, S&P 500 possibly continuing a downtrend. And the prediction kind of worked. When you look right here, it stopped right here on my Fibonacci level of 110 or 405. And I drew a demand box as well. I had one coming from here, but then I drew one from here, and it's working out pretty good. And hopefully SPY is able to hold this level and make a U-turn. But if not, the next fib level, according to this, is going to be 398. But you also have a version point of control of 395 and 7 cents. But if it does make an uptrend, it's going to have to fight up against this area right here, 443.48. This version point of control that's sitting out there that haven't been touched. So let's go over to the weekly. Right now I have this set on the hourly chart, and I have the volume profile set on a weekly. So this is where we are on a weekly. You can see it broke above this version point of control, but it couldn't hold above the previous volume. Break above this value area, this volume value area right here. And right now you're seeing it right here. And for me, when I see the volume profile like this, and it's basically an inverted P, or you can say it's a B. I've heard other traders call it a B. And this is a high liquidity area. It's going to take a lot for the SPY to overcome this area, because this is the central area where most of the contracts were traded. And even though it's able to pop above, this pop right here was not volume driven. Even though you have these high volume candles right here, or ultra high volume candles, it wasn't as much as what's going on down here. You can see all this selling volume, buying volume, all this selling and buying back and forth here. And you can see that this area right here is going to be a monster area for SPY to overcome. And you can look right here, there's that 105 field right there. Well, 405.02 field right there. And here's our point of control. I have everything just clouded. I don't have any of the lines from the volume profile on, except for the version point of controls. So right now we have this P, this high liquidity area or high supply zone right here, and you can see how every one of these candles enter into this area, and it all got rejected. And SPY is sitting right here on the 100 on my fib 100 line, going down. So you have possibly two version point of controls where SPY still need to overcome. I believe it's still gonna have to. It still is going to be impacted by this version point of control on a weekly or this hourly candle, and then you have this other one sitting out there 443. So let's go back to the sector rotation and let's look at the greatest holdings for the XLE. The greatest holdings by weight is ExxonMobil, Chevron, EOG Resources. What I'm getting at with this is these are the potential plays that you want to possibly be in right now. I'm not a financial advisor. This is just for information and educational purposes. I'm not telling you to do anything, but this is something that you should be considering and looking at because energy is still up and it's making another U-turn. I don't think energy is over, especially in a high inflation environment. But these are some of the players you should look at. And right now we're looking at the top 22 holdings that are in the XLE. So you might want to look at some of these. Oxy is the Berkshire Hathaway or Warren Buffett. They keep pushing billions into millions into this stock right here. So this is one of the ones I'm actually in. And I'm considering staying in just because Warren Buffett keep pushing money into it. And it's relatively cheap compared to a couple of these other holdings right here. So we count them down. So this would be number 1, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So this would be number 8 by weight when it comes to the XLE. And exit out of there. And we can go look at the chart of Oxy. And there we go. Right now I have this thing set on a 5-year. I really just need to have it on at least a 2-year. Or no, I need to have it on a 5-year because I need to see what else is out there. And that's one of the reasons why I have it on the 5-year, so I can see where these other possible areas of resistance could be when these version point of controls. And it basically smashed through all of these. This one, it held and came back, did a retest, and then smashed above that version point of control. It smashed above this one as well. It's struggling still with this one right here at, what price is this? 61.83. It's actually overcoming it. So I would look at that more so as a place of support now, because this was in the past a high level of liquidity, and that would be this version point of control shooting out from right here. And this one is from 5/1 May 19. May 1st, 19. So, and it's overcoming that one. So this next one's at 84. If you look right here, 80, well, you can say 84. 83.94 is the next version point of control for this stock right here. And what you're looking at down here with my volume, I need to actually move this out of there. And all I'm doing is just putting an unbalanced volume on here. I have my unbalanced volume in a channel of the 52-week. I actually have this unbalanced volume in the 52-week high with 52-week low channel. And right now you can see Oxy is making new 52 weeks highs versus its 52-week lows. And as you can see right here with the same principle on volume, this is the highest candle for the 52 weeks. And this is the mid, and this will be the lowest volume area for 52 weeks. And right now, it's 6%. It actually should be higher than that, but I have it on the 252 day average percent when it comes to volume as well. So for me, it's creating all these new areas of these version point of controls for areas of possible support if it did come back down. And right now I have my fibs on it from this. Let me screen back out. So from this point, this last swing low and this last swing high over here, right here. So I'm expecting Oxy to keep going up. Warren Buffett bought it, so a lot of other traders are gonna pile on it as well. Especially when I drew this demand area right here, and I drew a supply area, and it's overcome all that. So Oxy, in my opinion, is probably gonna keep going up because it's one of the cheaper energy stocks, and it's a lot of people's favorite play, especially because Buffett is in it, and you can see with the unbalanced volume, it's way above 70. This bottom area right here is 70, just like the RSI. While this top line right here represents 100 when it comes to 52-week high of unbalanced volume. And right now you can see it's making a new high in the unbalanced volume as well, and it's never left 70 when it comes to its 52-week high, 52-week low ratio. And you have down here this purple line is just showing you when it's when it comes to positive and negative, it'll change cyan to positive, it'll change negative when sellers are taking control, and this orange line is the 50 for the range. So Oxy looks pretty good, and we can go look at one of the ones that is really hurting is the NASDAQ. This is the NASDAQ futures. And this is the view of the NASDAQ. I believe I drew these supply and demand zones on a weekly, and I need to push it out. So I'm going to push it out to a 5-year and see what it shows us. Slow. 1294, 12942, 12942, 12942 points. 15262, 15268, 15268. 15, 15. According to this Fibonacci right now, you're looking at a possible drop to this 90. Or this is 10%. This is with 90 fib. So right now NASDAQ is hanging around this area of 110 as well, just like the S&P 500. When I grabbed this last swing low, last swing high, and it possibly could drop down into this area of demand down here at 126.6 is that fib, but the number is 1239.3.50. So hopefully it doesn't. Hopefully this is the end of all the selling, but I know it's not going to be the end of volatility because its current point of control is here, and it's going to have to fight its way back up because that area right here is going to be a high level of liquidity. And this area right here is going to be a high level of liquidity too, according to the volume profile. And this version point of control sitting out here, and you have another version point of control sitting out here as well. But I would consider this area right here a high level of liquidity as well. So I can actually get rid of these zones right here. And according to the volume profile, I actually draw from here to here is going to be a high level of liquidity. From here to here is high level liquidity. And we're going to draw this area as well. Well, it's already right there. I'm going to leave that weekly demand area right there. Even though right now it's falling out, I'm going to wait till next week to officially get rid of this area, because you can see how it bounced right here when it entered into this area of demand. And right now it was struggling all last week in this area of demand, and it seemingly broke through it. But we'll wait for confirmation for next week, because if it has a big move up, it'll confirm this area demand and this area demand as well. And this is it on the weekly chart. You can see here's this area high liquidity. It couldn't overcome it. Area high liquidity. And this was just a move out the FOMC. And you can see how it plummeted right back down into these areas of liquidity. And you can look right here, this area of liquidity, and it's sitting right there on this demand area that I had drawn out. And this is pretty much the end of the video. I wish you all the best in the markets. If you haven't already, please like and subscribe. If you have any comments, please leave them down in the comment section. I wish you all the best, and God bless.